Hello guys, welcome back to my channel. Before we could go on today's topic, which is basically reviewing the massive trade I had on GBPUSD, I would like to remind you that I am not a financial advisor. Do not use any information you hear from this video as a financial advice. I would like also to extend my gratitude to all of you that have taken time to subscribe to this channel, those who have left comments, likes. Thank you guys. And all right, so today's basically it's a quick review on GBPUSD. I hope that you find value in my videos, my reviews, and talking about my previous video on how to create a model using ICT concepts. When I check the analytics, it shows me clearly that people are not interested in learning. People want the quickest way to make money. The reason is the prior videos where I was reviewing trades and where I was doing a bit of teaching, those videos have, they attracted a larger audience compared to the video where I shared on how to create a model. And the funny thing is, people will still come back and ask on how to create a model. So this tells us that the majority of people are looking for quick answers, the fastest way to make 1,000. You have to chill and do the right thing. Anyways, let's go on GU. So I had massive sales on GU, massive sales on EU. So this is the daily time frame. You can see this small magnet right here. This is basically a liquidity pool, and you can see price took this liquidity here, and then this low that was left on last week, has been taken out. These highs have been taken out. I still believe that we are bearish on GU and EU. We could probably see a small retracement just to fill um, this gap in here. That is possible, but definitely we are still bearish on this pairs. Quickly we go to H1. Now I do have these day dividers. I don't know how you would call them. You can see these vertical lines. They basically divide days of the week. Like this was today. No, yesterday actually, because now according to the finish time, it's already almost 1 a.m. So this was yesterday, and this was Monday. So how to access this? You go on the settings and you click this. You just highlight this. You will find it like this, and then you just click on it and highlight it. You can change colors whichever you want, and then these will appear on your screen. So we find Monday price returning to this order block, a massive sell that left an order block that also broke this market structure. Price went back into it, and then we left this swing high, and you already know what happens when a swing high or swing low is created. There is buy side. Here we have buy side, and here we have sell side. So we know whenever price comes into this area, it has to take it out, and when price comes here, it has to be taken out. This is not a selling zone, and this is not a buying zone. You have to wait until price takes out liquidity. If you don't wait for price to take out liquidity, then your stop loss is going to be liquidity. It will be taken out. Definitely it will be taken out. All right, so and then we have this imbalance in here. And then so now let's see what happened. Price, this a new day opens. All right, this is the Asian range in here, and then we keep going right there. Okay, it hasn't been taken yet. I'm still watching. I'm still patient. Now we see price starting to go up, grabbing all the liquidity up here, and also we have this imbalance that was partially filled. Let's see if we use basically you could say that it was filled up because price went beyond 62%, so I could say that it was filled up. But anyways, price is grabbing liquidity. Now this is the problem of most of you people. When you see a breakout like this, what you are doing is you are trying to chase price. You start going to M1. All right, this is what you are doing. So you go to M1. This is an order block, a bullish order, because you've been told that every candle, every opposite candle, every candle that is opposite to the current move, it's an order block. If it's bullish, there is a down candle, it's an order block. That's not how it works. And then you start going, okay, we are on the order block, and then you press your buys here, your stop loss here, and then only God knows where you are targeting. This is wrong. If you trade like this is wrong. That's not how to trade. And some of you already have this as your um, resistance turning into support. Anyways, let me show you how I was able to execute this trade. I'm not going to make a review on EU, because once you see how I was able to execute this trade, it's the same way, because these two guys move in a similar manner. So I'm still waiting. I don't chase price. I do not chase price. If price has gone to a liquidity pool, and price is doing all the games here, I show you, price keeps doing this, you don't chase it. You simply wait. You simply wait for price to come back below. All right, so now, not yet. I'll show you. So if we go to M1, those that took this breakout as a signal, your stop loss is placed here. Can you see that you've been taken out? Be patient. There's no rush. Be patient until your analysis plays out the way it has to. I'm still waiting. Now I just noticed that we have grabbed more liquidity from these highs. Let me zoom in. You see these highs? Price just took out all the liquidity. All those people that were chasing price up, they've been stopped out. Not because the algo knows you that as a retail trader. No, not at all. It's not even hunting your stop loss. It doesn't even know it's there. Smart money is trying to get the best price possible. They're like, my English fails me all the time. Like, they're trying to get the best price they can get. The best price. And in the process of trying to get a better price, you fall victim. We become victims because we get in their way. It's like a train moving at 100 kilometers per hour, you know, just and you try to go in front of it, trying to stop it either with your natural strength or with the other means, it will not work. So when you go in front of these guys, you'll be you'll be dealt with. The best way possible is to go, let them pass and go behind them. Okay, so I'm still waiting. First grab of liquidity and a second. All right, you see this candle? On this candle, let me zoom in again. You see this candle? We took out liquidity and we broke the law of this candle. If price is bullish, it has to respect the law of a previous candle. We took out liquidity and then we break it. This candle took out this liquidity here, and then this candle took out the liquidity from this. If you go to a smaller time frame, you'll find these are relatively equal highs, and then price goes lower. When I saw that, and the time was okay, we are about 2 hours 30 minutes before New York to open. I went short in here. My stop loss was above, so I was risking 20 pips. So somebody's going to say, you did not wait for a smart money reversal. This is what you are supposed to wait for. This is what you are supposed to wait for. This does not always come. I know you can bear witness with me. You don't always see this pattern when price is reversing. It's not the only it's not the only uh, reversal template that price paints before a reversal. It's not the only thing. Other ways of noticing this is through watching price action. So after this liquidity grab from here, after this liquidity has been grabbed and this has been grabbed, I know for sure smart money has no more interest in this area. No more interest. And that is where I go in. So instead of going in front of them, I move behind them. We also had this imbalance that price had to come and fill. But this imbalance here is not my target, because if price has to come lower, why should this imbalance take price up? If this liquidity has been taken out, why would this imbalance take this price up? Which one is more stronger? This scenario here or this small imbalance in here? You choose. And my target was this odd low, and my target was, I took 100 pips, and on EU I think I caught about 60 pips. Together it was about 150 pips. Let's see. There we go. New York not yet open. There we go. New York. Yes, New York is open on this candle. And then soon the equity open is gonna kick in and the volume comes in, more volume. Now it's equity open right here on this the next candle. Yes, right here equity opens. When indices go crazy, volume goes really crazy, and we see, look at that volume. Boom, look at that. Boom, look at that. Look at that. And that is where I took my profit. And I want to show you the power of waiting for liquidity grab. I want you to see the power. You see this price that has taken this sell side liquidity. Look at the, wait, hold on. Look at what happened. People are still chasing price now, a breakout. And now we have a retest. It's not a retest. Boom. You see? Can you see that? Can you see this? That after price takes out sell side, there is no way, there's no other thinking. Price has to reverse. When a sell side is taken, price has to reverse. The question is, what is the sell side liquidity to you and what is buy side liquidity to you? How do you define it? Because people have different definitions of this. So I hope you've learned something. This is how I entered my my sales today on GU. All right, you can see that price has been kept above this horizontal line because liquidity has been grabbed. So those who were chasing price to sell have not been given the chance to close their trades. And then somebody tells you price is not booked by an algo. That's ridiculous. You've not studied the markets. And quickly on EU, oh, I still have this stuff in here. Quickly on EU, let me remove this. My entry was on this candle right here. If you put a fib, yes, my entry was here. On the, you go check my screenshots on Twitter and Instagram. You'll find that my entry was here, and my this is where I took profit with about almost 60 pips. So I hope you've been blessed, and remember to subscribe and share with your friends. Until next time, stay blessed.